Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 28th, 2025, and we're diving into the latest earnings report from Brown & Brown, a leading insurance brokerage firm. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Brown & Brown has just released their third quarter 2025 results, and there's a lot to unpack, from revenue growth to profitability metrics.
Revenue and profitability overview. Let's start with the top line. Brown & Brown reported total revenues of $1.6 billion for the third quarter, marking a significant 35.4% increase. John, what are the key drivers behind this growth?
The revenue growth is quite impressive, primarily driven by a 34.2% increase in commissions and fees. Additionally, the company achieved an organic revenue growth of 3.5%, which indicates strong underlying business performance beyond acquisitions.
And how did this translate into profitability?
Despite the revenue surge, the diluted net income per share decreased to 68 cents. However, the adjusted EPS, which accounts for non-recurring items, rose to $1.05, beating the analyst forecast of 90 cents. This reflects effective cost management and operational efficiencies.
Operational efficiencies and future outlook. Brown & Brown's EBITDAC adjusted increased by 41.8% to $587 million, with the margin expanding to 36.6%. What does this tell us about their operational efficiency?
This significant increase in EBITDAC, adjusted and margin expansion, indicates that Brown & Brown is not only growing its top line, but also improving its operational efficiency. The company is effectively managing its expenses, which is crucial for sustaining profitability.
What did the CEO have to say about these results?
J. Powell Brown, the CEO, expressed excitement about the company's growth, profitability, and cash flow conversion. He highlighted the addition of over 5,000 new teammates, which enhances their global capabilities and customer solutions.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 90 cents for this quarter. How did Brown & Brown perform against these expectations?
Brown & Brown exceeded expectations with an adjusted EPS of $1.05, outperforming the forecast by 15 cents. This beat is a testament to their strong operational performance and strategic initiatives.
What does this mean for investor sentiment?
Beating EPS forecasts generally boosts investor confidence, suggesting that the company is on a solid growth trajectory and effectively managing its resources.
Strategic initiatives and risks. Brown & Brown has been active on the acquisition front. How is their recent acquisition of Accession impacting their financials?
The acquisition of Accession has positively impacted their financials, contributing to revenue growth and enhancing their service capabilities. However, it also increased the company's indebtedness, which is a risk factor to monitor.
What should investors be cautious about moving forward?
Investors should be aware of the forward-looking statements and the associated risks, such as integration challenges and increased debt levels. It's crucial to keep an eye on how these factors evolve in the coming quarters.